What's the latest with Netflix and the S&P? Let's dive right in. Wednesday's market session saw the S&P 500 index closing at an all-time high for the fourth day in a row. Impressive, right? But the gain was a tad slim, just 0.08%, pushing the index to 4,868.55. Nonetheless, it was enough to extend the S&P's winning streak to 5 straight sessions. On the flip side, the Dow Jones Industrial Average didn't fare as well. It slipped into the red by 0.26%, shedding just under points to land at 37,806.39. This loss mirrored its performance from the previous day. The star performer of the day was Nasdaq, climbing 0.36% to close at 15,481.92. The tech-heavy index managed to shrug off a pullback of more than 1% from its high. While S&P and Nasdaq performed well, the Dow slipped into the red. Don't forget to subscribe to our YouTube channel to stay updated with all the latest market trends and news. Netflix stole the spotlight with its fourth quarter report. The streaming giant raked in more than 13 million new subscribers, pushing its total to a staggering 260 million. This surge in viewership translated into a substantial 10.7% leap in Netflix's shares, painting a picture of a company in full throttle. The revenues for the quarter surpassed expectations, indicating a robust demand for the platform's content. However, it wasn't all roses and rainbows. Despite the significant revenue beat, Netflix's earnings fell short of the mark. This contrast between revenue and earnings underlines the challenges that Netflix faces in balancing its ambitious content budget with its profitability goals. But nevertheless, the market responded positively to the subscriber growth and revenue beat, underscoring Netflix's influence. Netflix's performance significantly influenced the market, but what about other companies? Tesla and IBM had significant after-the-bell reports. Let's delve into these two tech giants' performances. Tesla, the electric vehicle pioneer, unfortunately missed the consensus estimate by over 5%. The company also fell short of revenue expectations and warned of slower volume growth in the coming periods. This news sent shockwaves through the market, leading to a more than 4% drop in Tesla's shares in after-hours trading. On the flip side, we saw IBM pull through with a strong fourth quarter report. The tech stalwart's earnings and revenue exceeded the consensus estimates, leading to a healthy surge of over 7% in its shares after hours. The company's outperformance can be credited in part to its advancements in artificial intelligence, a sector that the market is particularly keen on. While Tesla's performance was disappointing, IBM's strong report brought some balance. Each company's report reflects the unpredictability and dynamism that make the stock market such a captivating space. What should we look out for in the coming days? Let's start with the earnings landscape. A handful of heavy hitters are set to release their earnings reports. We're talking about industry giants like Visa, Intel, T-Mobile, Comcast, and Union Pacific. These reports could provide some pivotal moments in the market, potentially influencing investor sentiment and market direction. In addition, total fourth quarter earnings for the 83 S&P 500 members that have reported results are up 0.9% from the same period last year on 3.9% higher revenues, with 78.3% beating EPS estimates and 65.1% beating revenue estimates. Furthermore, the first read of fourth quarter GDP is on the horizon. Expectations are set for 2% growth, a notable decline from the 4.9% in the third quarter. Let's end this with a simple reminder. Keep an eye on the upcoming earnings reports and the first read of Q4 GDP.